Uh, Hello and welcome, everyone. Thank you so much for joining me today on the webinar. I'm David Blatt. I've been in the mortgage business for over 25 years, and I specialize in reverse mortgages and helping seniors. There has been a lot of myths and misinformation about reverse mortgages. So I thought it was important to share these facts with you. Very important, especially during the corona pandemic, which has just turned the world really upside down. Because I'm also a senior, I know what we're going through, the uncertainty of the stock market, fear of catching the virus. And if you're still working, possible layoffs. And if you own a business, possible closings, causing a loss of income. Well, I'm here to tell you that a reverse mortgage can bring you some peace of mind. Because it can relieve some of these concerns about money, I know it sounds too good to be true, but I believe in it so much that my wife and I took out a reverse line of credit ourselves a number of years ago. And now we always know that we will have supplemental income should I ever need it. During today's webinar, we'll talk about all the advantages of a reverse mortgage, and there'll be lots of time to ask as many questions as you would like to do. My aim is to dispel these myths. So let's get started.
Yeah, and that's a big issue for reverse mortgage, as we've seen. There's a lot of fiction, and we're going to take the next few minutes to talk about some of the facts versus fiction. The first being that, and let me see here. If one spouse passes, the other could lose the home. Is that true, David?
Well, that's false, Vito. The fact is, FHA reverse mortgages, which is really called a HECM, it stands for Home Equity Conversion Mortgage, have safeguards in place to ensure that non-borrowing spouses can remain in a home as long as all the loan agreements are otherwise maintained. And that's really just making sure the house is always the primary residence, paying the property taxes, homeowners insurance.
Well, that is a piece of information I know a lot of people don't realize, that you're not going to lose your home. And that goes back to people believing the lender is going to take the title to the home.
Yes, this is really a big misconception. I hear it all the time. That's false, of course. The fact is, you still retain ownership of your home. The reverse mortgage is only a lien. It's a loan against the property. And by the way, there's no prepayment penalty on a reverse mortgage. It can be paid off at any time.
Well, and that's, speaking of the loan, and it's repaid, people fear that the lender is going to take all the remaining equity on the home.
Well, that's false. And the fact is, any remaining equity belongs to the borrower or their heirs after the loan balance is repaid. The amount of the loan balance to be repaid includes the finance closing cost, all cash advance to the borrower over the length of the loan, any accrued interest, and any FHA MIP insurance.
And another big one that we're hearing a lot is the children. People are worried about with the reverse mortgage, their children aren't going to be able to keep the home once they pass.
Yes, this is also a big concern. This is false, and that's fact, of course. The borrower may leave the home to whomever they choose. If children want to keep the home, they need to pay off the loan balance. Children have several options of paying off the loan, including refinancing the debt, using liquid assets or life insurance, or just selling the home. After the loan is repaid, the home of the remaining equity would go to the heirs or children.
And people are also worried about their spouse passing. And if a spouse passes, they're going to lose the home as well. Is that true?
No, that's not true. When the house is sold, there'll be no mortgage debt for the family or their heirs at all. There's safeguard always in place to ensure the spouse or the non-borrowing spouse will remain in the home as long as the loan agreements are always maintained.
And that should provide a sense of security for all couples who take out the reverse mortgage. And the other one people are always worried about is the children are going to have to repay that loan. And we're going to talk about the children and the heirs quite a few times and reiterate these points because it does come up a lot, the children and the reverse mortgage, because a lot of times the children are a part of taking out the reverse mortgage or a part of that decision process. So about the children being responsible for paying off that loan. What about that, David?
Well, again, when the house is sold, there'll be no mortgage debt for the family or the heirs at all to pay. Absolutely zero. The children will have the house and the heirs. They don't have to worry about it.
Yeah, and that's, again, we want to emphasize that because we know that part of this reverse mortgage decision-making process can come down to not only the couple or the individual, but it is a conversation that parents and children often have together. So if the homeowner becomes ill and they need to move to a care facility, a lot of people believe that at that point, the reverse mortgage is going to come due. Is that true?
Again, that's false. The fact is, a reverse mortgage is not due and payable until the last surviving homeowner dies, sells the home, or does not live there for 12 consecutive months. As long as the property taxes and insurance are paid up and the property is maintained. This means that even if one spouse has a prolonged stay in a hospital or rehab facility, the reverse mortgage will not be affected and will, in fact, continue to provide much needed cash flow during these critical times.
And that's that cash flow we're going to keep coming back to, and because right now we are seeing a lot of people feeling that there isn't a lot of financial security for themselves or for their parents. And the other a lot of people are asking or talking about is when you're taking out a reverse mortgage that there's a lot of out-of-pocket expenses. Is that true?
Definitely false. The fact is, the majority of lenders, and all the ones that I use, of course, the closing costs and fees can be financed into the reverse mortgage. This means the borrower incurs very little out-of-pocket costs. The required HUD counseling fee and the property appraisal, which is an FHA appraisal, are usually only out-of-pocket costs. And of course, the homeowner gets a copy of the appraisal. In fact, I have a couple of third-party or HUD counselors that we don't even charge for the counseling fee at all.
Well, that's good to know, and that's a great reason to really get to know your reverse mortgage, the person you're going to take that out with, because there are often opportunities that there are cost savings instead of large out-of-pocket expenses. Another thing we hear a lot is parents and grandparents always saying, "Well, I don't need it now. I can just wait and I'll get a reverse mortgage when I really need it. I'm not ready for it. It's not a time where I'm feeling a financial crunch." What would you say to people who believe that now they keep saying now's not their time?
Well, it's just like anything else. Don't count on it. I mean, we don't know what the future is going to be. It's actually gotten very tough or tougher to get a reverse mortgage over recent years. FHA has tightened the quality and the qualifying standards to reduce defaults due to non-payment of property taxes, homeowners insurance, and homeowner dues. Just because a reverse mortgage is available to you today doesn't mean it will be tomorrow, even if guidelines don't change at all. Plenty of other factors could make a reverse mortgage less workable or attractive for you in the future, less attractive.
And that's important for, I'm sorry, go ahead, David.
I was just going to say, and a number of these factors are higher interest rates. Interest rates start rising. The reverse mortgage offers really more money when rates are lower, so that could affect it. Lower property values. Many real estate markets have really appreciated over the years. If values go down, again, there'll be a correction, there'll be less money, less value to qualify, and you'll receive less money in the reverse mortgage. Deterioration of your credit or financial situation profile. In 2014, FHA rolled out new financial assessment guidelines that require lenders to take into account your income, expenses, and credit history. Deterioration in the condition of your home. We all know that homes take a lot of maintenance and it's expensive. expensive. If you're tight financially and can't keep up with your maintenance of your home, it may be tough to get a reverse mortgage in the future. It doesn't have to be perfect, the appraisal, but does need to be at least reasonably decent shape to qualify for a reverse mortgage.
Well, and those are a lot of factors. And the one thing that you didn't mention is one of the reasons we're here today is, and we don't mean to put a scare tactic in anybody, but no one really foresaw the pandemic coming. No one foresaw COVID-19 coming. And that's another one of those situations where there'd be no way to predict that. So is it a good time to get a reverse mortgage? It's a good time with all the factors David outlined. It's also a good time to think about what else could be coming. And again, we're not here to put a fear factor in anybody, but that's one of the reasons we're having this today is we've had a lot of people contacting David saying, what can I do? Tell me about reverse mortgage right now. So those are all great points.
Yeah, and also the time to get insurance is not while your home is already burning, or car insurance, after you have an accident, God forbid. But if you qualify today and the reverse mortgage truly helps you, take advantage of it today. There's no guarantee it'll be available in the future at all. And just to let everyone know, reverse mortgages have been around for many, many years. The Reagan administration, actually, Congress passed a bill around 1984, and it was in combination with FHA HUD to approve this. And every year, Congress has to approve a reverse budget along with the FHA purchase budget.
All great points. Another thing we hear a lot about is for whatever reason, people believe they're going to be forced out of their home at some point because of the reverse mortgage.
Yeah, this is really a number of times it does come up. It's absolutely false. The fact is, actually, the loan is designed to help seniors continue living in their home. That's why Congress passed this bill. There was a big need for this. In fact, you will never be evicted or foreclosed upon unless you fail to pay the property taxes, insurance, let the home go into disrepair, or you just leave the home.
Exactly, and these are all these myths. Just so everyone knows, are actual questions that we've encountered or people are asking right now. The other thing is people talk about is they don't need a reverse mortgage because, quite frankly, at this point, they're not cash poor. And what would you say to them?
Well, the fact is, while many seniors do not need a reverse mortgage for living expenses for emergencies today, the fact is most seniors are interested in using possibly the lump sum or monthly proceeds to plan for their estate or either enhance their standard of living. A growing number of seniors with even multi-million-dollar homes include reverse mortgages in combination with financial guidance from their advisors in their legacy or estate planning. And actually, when we took our line of credit, we were also advised by our financial planner to consider it years ago. And of course, we don't have a multi-million-dollar house, but it's very important for us to feel that we have another added protection.
And that's important. I'm glad you mentioned that. We have a lot of financial planners and CPAs, especially in the financial planners, who come, and this is a tool that they can help use for people's retirement and their financial plans. So being cash poor sometimes is one thing, but also thinking about your retirement, the financial plan that you have, you're putting together. These are all opportunities and reasons to consider reverse mortgage. And the other thing that we hear a lot about is concerns about the bank. And bank concerns are nothing new, and they'll always be there. But people get worried about the bank taking all of that equity. What can you say to them?
Well, again, that's false. The fact is, it's certainly not true. First of all, the banks do not want any homes at all back. On traditional loans, you are required to make payments to pay down the loan balance. On a reverse mortgage, there is no payments, however. Banks are not charities. They don't loan money for free. They do charge interest on the money that you borrow. However, on a reverse mortgage, instead of just making you pay the money back, the bank will simply add the interest onto the loan balance every month, and it accrues. This means that your loan balance will grow every month instead of down because you are not making any payments. You can make payments, Vito. It's strictly optional. Some people actually do make them occasionally. But again, it's optional. Most people do not make payments.
Well, that's good information. I don't think a lot of people realize that that is an option. Another thing people talk about, and you alluded to this before, but let's talk more about this idea of counseling. And people have to go through counseling, and a lot of people say they don't need the counseling. But talk a little bit about the reverse mortgage counseling and why there is benefit to that.
Well, the counseling feature was added many years ago, and it's really a great tool. It's important. Deciding whether to take out a reverse mortgage loan can be very challenging. It's hard to estimate how long you'll stay in your home or what you need to live, how much money there over the long term. Seniors are also victims of fraud, unfortunately. Federal law requires that all individuals obtain a reverse mortgage, receive this unbiased, and again, unbiased counseling by a third independent party. It's very important, and it really puts the seniors at ease listening to HUD-sponsored counseling, approved counseling.
And that is, yeah, that's a big situation. There's a lot of fraud. The scammers are getting better at it every day. They're one step ahead of everybody. So having that HUD, that licensed HUD individual to take you through counseling is really, really important. Another one, we're going back to that eviction now. People think they're going to lose the home, the bank's going to take the home, but now there's always this fear of the big word, which is eviction, and that they're not going to lose it, but they're just going to be removed from it. Is that a possibility?
No, it's really never, and it's really important. You leave the home, a senior, when they choose to leave the home. No one will force you from your home ever. The reverse mortgage is not due till your home is no longer your primary residence.
And that primary residence is obviously the key phrase. If I get a reverse mortgage, and we're going to go back to the children, because a lot of children of seniors, and when financial planners talk about retirement, they talk about the legacy the parents want to have. And usually that big meeting when the financial planners sit, or the accountants sit with someone, or the parents sit, or the big meeting of considering a reverse mortgage, it always comes down to a question of, what about the repayment? What about the heirs? So I just wanted to go back to that one more time with a little more in-depth answer to that.
Well, if you get a reverse mortgage, you certainly are not burdening the children. A reverse mortgage is a non-recourse loan, which means that if the loan amount exceeds the value of the home and the estate sells the property, the estate does not owe more than what the house is sold for. If the estate decides to retain possession of the property, the loan amount must be paid in full, at which time any remaining equity be transferred to the estate. And the reason why this is the case is because part of a reverse mortgage, this is a FHA HUD mortgage, there's FHA insurance, just like on a forward purchase mortgage. And that FHA insurance protects the bank, that there would not lose any money, and the estate, which is the children, if for some reason at the end there was not sufficient equity in the home. And one more thing, if the children in the estate want to buy the home, even if the house may be not worth as much, over many, many years, the estate can buy the house at that time for only 95% of the value at that time.
That's something a lot of people probably don't realize, but is very important. And then what about this idea of I can't get a reverse mortgage if I have a conventional mortgage? I know that's kind of complicated, so if you could talk a little bit to that, that would be great.
Well, although this is true, you can get a reverse if you use the proceeds to pay off your existing mortgage at closing, which is like any other refinancing that takes place. This is why, by the way, Vito, that most of our clients, a lot of them, take a reverse for this reason, to pay off their existing mortgage payment and loan, and this automatically increases their monthly income. because they do not have a mortgage payment anymore. And in many cases, besides paying off the mortgage, we give them extra cash for security if they qualify.
And that's another huge point for estates, for seniors, for children of seniors, and for financial planners. This whole idea of, and we hear it a lot in financial planning, the concept of retirement income. So I'm really glad that you touched on that. And just to I want to wrap up, there's a lot of benefits for the reverse mortgage, but one thing that we haven't really talked about is how can people use the money? Once they get the money from a reverse mortgage, what is it? Are there restrictions? What can they do with it, David?
Well, basically there is no restrictions. It's their money. There's no income tax on the reverse mortgage proceeds. It's your own money. The only tax would be on people that would be on Medicaid. But for most people, there is no tax at all. They can use the money for anything they want to. And some of the qualifications, of course, they have to be at least 62 and over. If one of the spouses are younger than 62, that's fine. They must be living in their house again, and it must be their primary residence. How much money can they get is always a question. And that really depends on the age of the homeowner, the value of the home, current interest rates, and what the HUD limits are in their area. And there's a number, one more thing, Vito, there is a number of ways they can take the money out on a reverse mortgage. I think you were getting to that. It could be a lump sum over 12 months, a monthly cash payment, and just a line of credit that actually will grow every year. And this can be changed every month. It's very flexible, and they can change these methods of receiving the cash at any time.
Well, and that's important because it comes down to, for a lot of people, the desire to have retirement income, the desire to have cash. People want to travel. People want to give to their charitable foundations. People want to do any number of things with the money. And the point is they can, and they can take it in multiple ways. Of course, the question that always comes to, what do you have to do to qualify? If you could maybe talk a little bit about the qualifications.
Yeah, again, they have to be 62, at least one of the spouses. Payment history has to be good on their mortgages and property taxes over the last 12 or 24 months. They need to go to counseling. We really can't do an application until we get a counseling certificate back. And by the way, the counseling is very simple. You don't have to go to any office. It's done by telephone. And it typically takes 45 minutes to an hour. And it's just kind of a feedback, questions back and forth. And again, it has to be your primary residence. And you need to meet the financial equity guidelines that are established by HUD. So
we've talked a lot about reverse mortgage today, and I just want to recap quickly, and then we have some questions and to get to. But for everyone, this is obviously a complicated subject. It's nothing to be taken lightly, of course, which is why, we recommend talking to someone, especially, someone who has knowledge and information and who can calmly have the conversation with you, with the children, with the financial planner, the estate planner, about all the benefits for taking out a reverse mortgage and making sure that it's right for you. And especially today with the people, the words financial security becoming more and more used every day because of the pandemic, this could be a good time to consider it. We have a question, and let's go into there. Let's see.
So, while you're looking that up, I just want to mention, reiterate, the money could be used for anything, as I mentioned, and it could be just used for a bucket list, just a trip. Say the family wants to just, the seniors want to take their children and grandchildren on a special trip, and something they always wanted to do. They didn't have the liquid assets. You can use this money to go on this trip and enjoy yourself, and of course, helping your kids or your grandkids with a college education. We all know how expensive that is today.
That's a good point. Now, the question we have, one of the questions is, what is the difference between reverse line of credit and reverse mortgage, if any? So what is the difference between reverse line of credit and reverse mortgage, if there are any differences?
Well, the difference really is the way the senior has to take the money out. Just a reverse mortgage, if you want all cash, for instance, at closing, you can take 60% out the first year and 40% in 12 months. But if you want just to call it a line of credit, kind of like a HELOC on a forward mortgage that the banks do, at closing, let's say you want $10,000, $20,000 to catch up on credit cards and consolidate debts, and you want to leave let's say the balance could be 100,000 or whatever that number is, and that will just actually collect interest every year and grow, and you can use that money anytime you want to. You just contact the servicer, give them a call and say, I would like to pull $10,000 on that, or $500. So that's really the difference. It's the same procedure. It's really just the way the senior wants to take the money out of the account.
Great. Now, someone has asked the source of all the fictions that we've been going through, and we've been all of this information, the fact versus fiction, that we've compiled. It's a small part of the questions that David gets asked regularly, that we see online, and that we hear about through different industry publications and different studies. And just there's a lot of senior studies out there, and there's a lot of questionnaires that are sent out. We do a lot of research. David has fielded all of those questions in the past and many more. We kind of took a subset of some of the hottest topics that we're hearing right now the last few weeks, and we put them out here. There's a lot of fiction out there, and we have a guide towards that. And I would encourage everyone to call and ask David, because we're getting new questions every day. The one about specifically the children and the house and people being kicked out of the house and the bank seem to be the biggest hot points that we see people ask, whether it's online through the different studies for the reverse mortgage industry or the reverse mortgage trade publications, or just David taking questions. Because when David meets with you, what you're going to have is a good half hour, couple hours, whatever it takes, to sit through and really go through to see if this is right for you, and to really ask the questions. He'll ask you questions as well in a consultative manner, and that's why he's a consultant in this business, and he can write he helps you obtain the reverse mortgage, and he also helps obtain many other different kinds of mortgages. So basically, you're going to have an opportunity to talk with someone and really just understand the process. Is it right for you? Is this something that'll help you? And then often David gets on with the financial planners, the estate planners, the accountants, and your financial team, and come to a conclusion for you and with you that is in your best, obviously is in your best interest. And it is a process, so we encourage everyone, even if you're just curious, to have a call, because it is complicated. There is a lot of fiction out there. There's a lot of myths, and it is a very stressful time.
Vito, I think it's important to mention to the viewers that I do not charge for any consultation. It's all free. And if we can't help you, or you don't like the proposal, there's no charge. We never charge the client unless we can help them.
Well, that's another great point. So you're really looking at no obligation, and also encourage you to have your financial planner call David and get on a 3 or 4 person call, or if you want to first talk with him, or have your financial planner, your accountant, your estate planner, your children. We do have another question, though. It is the definition of a reverse mortgage. Someone's wondering about the exact definition.
Well, the definition is the home equity conversion mortgage, which is HECM, it's called. And that's really what it is. It's a loan, just like a forward mortgage, that you don't have to make monthly payments on, and you don't have to pay it off until you leave your home. I mean, that's simply what it is.
And that's I'm really glad somebody asked that because everyone, hopefully, as I said, David also writes other loans as well. So you're talking to someone who specializes in reverse mortgage, but who's been in the business for a long time. And whether you're ready to buy a home and take out a mortgage, or you want to go in the reverse mortgage, so you have someone who's seasoned, who understands all of the opportunity, and also someone who, as he said, he has a reverse mortgage. So, someone else has a question. How do interest rates compare to conventional mortgage?
They're actually very similar. I mean, rates are low. We're probably, I mean, it fluctuates every day, really. We're around 4.5% right now. And it's a yearly adjustable mortgage, most of them that we do, probably 99%. So the rates are very low. And which most people don't understand, if you take the line of credit, you're charged interest, just like on a HELOC on the bank loan yearly, but you're also collecting that same interest rate on the money on the line of credit. And that will grow every year if you don't touch it. So that actually grows every year, even though the house does not appreciate on the line of credit. So
that's
any other questions, Vito?
I think we have a pause in the questions. If you have any questions, please get them in. I think we're getting close to, it is about 36 minutes after. We appreciate everyone. And if you have any questions, feel free to reach out to David. Feel free to reach out on a call, email, Facebook, whatever you're comfortable with. Connect with them on LinkedIn. We encourage everyone to get as much information about this before you start to go into the possibility of thinking about it. Also, we would encourage everyone to have a call with them. If you have friends, family, if you want your financial planner to learn more. There was a time when reverse mortgage were not such pleasant words in the financial planning industry, but now they are gaining much headway, much steam. There are many studies that have been done regarding the benefits of a reverse mortgage for financial planners that David can forward to your financial planner or your accountant or your estate planner. And we will be doing more of these webinar, live Zoom meeting type calls in the future. So I'd encourage you to sign up for David's newsletter. This was our first. We apologize. We had a little technical glitch in the beginning, but like everything that's done first, there's always a couple of hang-ups, and I think we went through them pretty well. I want to thank everyone and let David give you a final message.
Yeah, before we close, one thing that wasn't mentioned, but where we mentioned that a senior could never be kicked out of the house. It wasn't in any of the presentation, but people ask, actually, does the deed on your home go to the bank? I just want to make this clear that the deed never is transferred like on a purchase or a sale. The ownership is always with the estate, your estate, and can also be in a trust, by the way. You can keep a trust on a reverse mortgage. So I thought that was important. So again, like Vito mentioned, thank you so much for joining me today. I hope you gained a greater understanding of what a reverse mortgage can do for you during these uncertain times. Things like financial assistance to use for everyday living expenses, pay off debts or your present mortgage payoff, help with property taxes, homeowner insurance, medical expenses, or home care. It can also help pay long-term care, which is very expensive today, as we know. Home improvements, improvements to your lifestyle, home repairs, and most importantly, increase your financial security and able to stay in your home. Again, thank you all again. Please stay well and safe. Thank you.